What's going on, guys? Just wanted to make this video. This video is going to be based on support and resistance and the way I use it in my trading every day. So let's just jump right in. The way I use support and resistance is based on the quarters theory. The quarters theory is basically 1,000 pip separations of whole price numbers, and then those 1,000 pips separated by another 250 pips. So I'm going to show you guys how I set that up and how powerful these levels can be. All right, so first things we're going to do, we're going to go to the weekly chart, weekly time frame, and we're going to get started. So we're going to look at where price has been in the past year or a few years. So you notice how the lowest point, we're going to start at the lowest point, and we're going to go based on the lowest to the highest points that's been trending throughout those years. As you can see, it's these points right here, and I'll highlight it. Give me 1 second. I'll show you from this high, like this area right here. Price has been going since 2015 all the way to current price, which is 2017. So 2 years it's been ranging in between these zones. And what we're going to do is we're going to start marking up our whole numbers. So we're going to start from, we'll do 6,800, which is right here, 0.6800, which is a whole number. And we're going to double click. I use red for my large quarter points, which is 1,000 pip separations. The large quarter points are the 1,000 pip separations again. So red, and then I put in the text, put large quarter point, LQP. I put it to the right. And I make sure my lines are pretty thin because I don't like a cluttered chart, and it helps me keep shit organized. All right. Then we're going to go to the coordinates. We're going to make sure it's 6,800 right there. We can just put 68, and it'll take it right to where it needs to be. As you can see, that quarter point's right there, already marked. So 1,000 pips is basically going to be 6,800 to 7,800. So anywhere, click on the screen and just go to coordinates, 7,800, right there, perfect. And we'll do one more 1,000 pip spread, which is 8,800. Okay. As you can see, they're on our charts now, and we're going to go ahead and separate these 1,000 pip movements by 250 pips, making the major quarter points. Okay, so we're going to start from, so 6,800 was a whole point, so 6,800, 250 pips is 70.7500, and I switch my color to black. 7,500. Leave it for a second so you can see. And if you want to measure that out, we can use the data price range tool to measure that out. Right here, go to this data price and range, and we're going to go from here, from that red line to that black line, 250 pips. You take the last number, this one away, the 4, and you say 250. Okay, perfect. We're going to go to the next one. So 250 pips between 7,500 and the next price is 7,300. So we can just put 73.73. Perfect. Next one is 75,500. 250 pip separations. Okay. Perfect. And if you want to measure them out, you can do so. If not, you don't have to. But just make sure on your current on your charts they're accurate. Okay, so let me finish this chart up, and then we'll get started on how to use these and how powerful they can be in your trading. Perfect. All right, so we're on the weekly time frame. So as you can see, based off the weekly time frame, you can notice how once they approach these zones, they tend to either reject and go the opposite direction, or either break through and close above and go on to the next one. All right, so let's go drop down to the daily now. We got it marked up. It looked pretty clean. You can see how it stopped, so you can check the levels out. All right, let's go to the daily. Reset our chart so it can spread out. Perfect. Let's go to the past so you know that they work. We'll start from here because I don't want to go too far back. As you can see, price broke under and dropped to the next one. Rejected off this 85,500 quarter point, went right back up to 8,800 quarter point. Beautiful. That's a pretty good trade. This is the daily chart. So you got in right here off the rejection. That's 250 pips. Each are 250 pips. So that would have been a 250 pip move. And in trading, that's an amazing swing trade. You can capitalize depending on your lot size and leverage, of course. You can make a lot of money. So as you see, it broke below, struggled right here. A reversal candlestick or a candlestick pattern right here, which was engulfing, or evening star, morning star, whatever it's called, right there. If you got in right after, still 250 pip drop, boom, same thing, engulfing candle, beautiful, broke through, engulfed, closed, dropped to the next one. All right, rejected off this one, bullish engulfing, took it up to the next one, boom. So you're making pips on 250 pips off each move. However, I would recommend keeping your take profit like 10 pips, 20 pips, below your quarter point, because sometimes it'll be very close, like on this one, and you do not want to be in that situation where you're just getting whipped and you're not, getting your take profits hit, and then it goes against you and you lose all that profit. All right. So as you can see, they're respecting very well. They break through, go to the next one, struggle right here. This would be a no trade zone. You guys should know that. Consolidation. This is horrible. However, once it breaks out, it goes to the next one. Rejects off, that zone. Bullish engulfing. Retest. Take it up. Boom. Breaks through. Too much seller's momentum. Comes right back in. Breaks through. Drops back to the previous one. 75,500 one. All right. Double bottom off the quarter points right here. Double bottom means came back twice. Beautiful. It respected that low. Bullish engulfing, broke above, and it's just rose beautifully. That would have been, you take profit 1 right here. Next one with trend, take profit 2, and next one would have been take profit 3. However, sellers came in the market and got in control. Broke below, retested it, dropped to the next one, broke below, got close. That's why, you still monitor your trade. I would have gotten out when I seen, on a smaller time frame, we could have saw buyers coming back in the market. However, you still would have been in very good profit. Once this closed and retest, you would have been in 150 pip profit. So you could easily took that and moved your stop loss accordingly when you saw buyers coming back in the market. So basically, this video was based on my support and resistance and how I use it. And it's pretty simple. However, I don't just use support and resistance alone. And I use confluence, meaning I use multiple confirmations. So just because I have a level break, I need multiple confirmations like trend lines and Fibonacci. And, I'm sure if I do Fibonacci off these levels, I'll get something like, let's try right here. High to low. Beautiful 38.2 rejection off the quarter point. Bearish engulfing. Beautiful trade right there. This is just the first video of many that are going to definitely help your trading go to the next level. I hope you got a lot of value out of this video, and I'll see you in the next one. Peace.